So you're still as much of a gold bug as you were last year?
Well, yes, but I suggest that people accumulate gold. They shouldn't market time the gold market because, we're going to have volatility and so forth. But if I look at the faces of Tim Geithner, of Ben Bernanke, of Mr. Obama and Larry Summers, that is sure that I will never sell any gold. That for sure. As long as these people are essentially structuring economic policies, fiscal and monetary policies, and foreign policies, no thank you, I will keep my gold. I will not buy paper money. But I have also stock portfolios, but my stock portfolios are concentrated here in Asia. I think this year they'll go down in value, but I don't feel comfortable holding too much cash because ultimately cash will be worthless.
So Asia going down this year, that's interesting.
Well, it's not necessarily a prediction that it will collapse, but I think in Asia we have a potential problem, and this is China. My view is, I'm not sure that China is going to collapse, but for sure it will decelerate, because I say in January we had loan growth of $200 billion. So on an annualized basis it would be $2 trillion. It's not adding up, something has to give. And the moment loan growth will slow down in China, you will have an economy that grows at a slower pace, or, as some people say, collapses. Nobody knows for sure. But if there is a slowdown, it will have deep implications on industrial commodity prices and the stock markets of resource producers like Australia, Brazil, Russia, and so forth.
And that will wash across the whole of Asia?
Yes, that will obviously. Today, the world is much more China-centric than it used to be 20 years ago, because the Chinese economy is very large. Brazilian exports to China are larger than Brazilian exports to the United States. And China has a very large market, and including India, it's a huge economy in terms of goods that they require. You have more mobile phones in China than in America, of course, because the population is 4 times larger. And the car sales are larger in China than in the United States, and then. So in terms of goods producing industries and goods demand, the emerging economies are today larger than the developed countries, so they have a huge impact. And if China has a recession, then it goes through essentially like a domino effect through all other emerging economies, because essentially China today exports more to emerging economies than to the developed countries.
Can we talk about India, which seems somehow to be off the radar screen of most otherwise globally minded investors? Why is that?
Yes, I'm amazed. I feel there is an opportunity in India. I don't think that stocks are all that cheap. They had a huge run-up from less than 8,000 on the Sensex to over 17,000. Now we're correcting also. Maybe we go down to 12,000 and so forth. But longer term, I think investors, global investors, whether in the US or Europe, they should have at least 50% of their money in emerging economies, because that's where the growth will be. And where growth is, you have GDP increases, and then along with nominal GDP growth, corporate profits expand. And so I think in the very long run, you will have higher returns by investing in emerging economies than, say, in Western Europe and the United States that are bogged down by excessive debt levels. That is the problem.
Mm-hmm. And Japan too, you mentioned. Also
but Japan has been in a 19 years bear market, actually more. We peaked out in 1989 at 39,000 on the Nikkei, and we went down to around 7,000 a year ago. And I believe that we're in a bottoming phase, and that from here onwards, Japan will actually outperform the US and Europe. Not because the economy is growing, but Japanese companies are not really about Japan, they're about the whole world. And there they are still very competitive.
On currencies, do you have any particularly strong calls on the dollar, the euro, the RMB?
The sad part is that none of these currencies are very desirable, neither the euro nor the dollar in the long run. I think the only sound currency really is obviously gold, silver, platinum, palladium. And then if you want paper currencies, I think that the Singapore dollar is a reasonably stable currency. The economy is essentially financially 100% sound. You have a diversified economy. A government that makes sense, is one of the few governments in the world that actually does something right. And the valuation of stocks are not terribly demanding because you get, in many instances, steady companies with a dividend yield of 4, 5, 6%. So I have also quite a lot of investments in Singapore, but I don't think the stock market will go up now. Probably it will go down somewhat, but let's say, as I explained, I don't feel comfortable to be in cash, and certainly not in US government bonds. That is the most disastrous investment over the next 10 years.
As far as other commodities are concerned, you've made a big call on wheat this year.
Well, I think commodities is funny in the sense that you have to buy them when the markets are glutted. And of the commodities complex, the only commodities that didn't go up in 2009, the grains, wheat, corn, soybeans, and historically seen, inflation adjusted, they're very, very inexpensive. And I think that over time, food will become a big issue, in particular because we have problems with the supply of water. And so I would position myself to be in wheat. Now, for the individual investor, the problem is that the wheat ETFs in general, ETFs on commodities are not a very good investment because of the monthly rollover. It's very costly. It's like the short ETFs on the S&P, because of the rollover, are not good investments in the long run. They're good as a trading vehicle. So how do you play the grains? Basically by buying farmland or by buying potash companies, in other words, fertilizer companies, or by buying some farm equipment manufacturers and suppliers of the farming industry and so forth. Or you buy plantations in Malaysia, Indonesia, and in Thailand.
So drawing all this together, you said 2009 was a year of great opportunity. 2010, more of a year of capital preservation.
Yes, I think, if I look back at 2009, and I was lucky to catch essentially the lows and stay in equities and also commodities, I think this year will be much more challenging because as you come out of a recession, usually the best part of the bull market is the first 8 months. Afterwards, the gains are more muted, and usually in every recovery, whether it was after 74 or after 82, there is a correction period, and maybe we have just sideways moving markets and end the year even lower than we are today, could be. But the other thing I wanted to mention, since I get so many emails from subscribers of mine and I see a little bit in the thinking of people, people make a huge mistake by a lack of diversification. When I believe something, let's say I believe in gold, but I would not put all my money into gold because maybe I'm wrong. So every investor, whatever he does, has to always think, what about if I'm wrong? And so you have to have a certain diversification and not to leverage yourself up too much, because the people that were leveraged long, say commodities in 2008, they got buried because the commodity markets collapsed by more than 50%. And this is the kind of volatility we will have. You have expansionary monetary policies, you have huge fiscal deficits, the private sector is occasionally contracting credit, so it leads to like a battle between the government flooding the system with liquidity, the private sector withdrawing it, and then occasionally markets shoot up like after March 2009 until recently, then you can get big corrections. Then we had in some commodities already 20% corrections from the peak.
Marc Faber, thank you very much for joining us.
My pleasure.